Let me first start by asking you where your worry stems from. As you well know, and you put in your note as well, this is an idea that was on the table in 2013 when the final licenses were given out. Cooler heads or saner heads prevailed, and we didn't allow the entry into of corporates into banking. Does it worry you that the idea is back on the table, or does it worry you more contextually, given where we are in the financial system in India and the economic reality?
Both. At the end of that licensing process, when we set out the terms for longer-term on-tap licensing, we had indicated from the RBI that perhaps it would be wise not to let full-fledged corporates, that is, industrial houses whose primary business was industry or non-finance activities, into banking. And we had left some room for houses that were primarily financial companies to enter banking. So it's not as if all industrial houses are prohibited. It's just those that are primarily outside of the financial business. And the idea was, just following practice in other countries, but also experience in other countries, as well as our own experience. The temptation for industrial houses to lend to themselves, what is called self-lending, is significant. And of course, this happens more in bad times when the industrial house is in trouble. And that's really a time when the bank should be exercising tremendous caution on who it's lending to and how much it's lending. And of course, if you're owned by a borrower, it's very hard to make that distinction. And previous episodes of allowing this in the US, this is called banking and commerce, but across countries where there's been banking and commerce, there's been pretty severe crises. Does not mean that there are no good industrial houses that will stay independent, but the conflicts of interest are significant. So that's one reason why this has been prohibited in many countries, also in India. The second reason is that it creates an undue concentration of economic power. People put their money in banks, they think it's safe. If you have a bank, if you own a bank and you need the money, well, it's very easy to get the money as an industrial house. You can grow significantly based on owning a bank. And that makes you enormously powerful economically and also to some extent politically. And this is one other reason why banking and commerce has been frowned upon in other countries. Let's keep the financial side separate from the industrial side. That allows for more competition on either side and eliminates the conflicts of interest. So for sound reasons, the RBI historically has not permitted it. There was a short episode, when the first banking licenses were given out, when in fact the rules had been changed. And based on the experience during that time, we decided there were plenty of good possibilities outside the industrial house sector for new banking licenses, and there was no need to let them in. And so we changed the rule back to what it was before.
Dr. Rajan, I'll divide the conversation into principles and practicality. On principles, like you alluded to, and the report also speaks of, that even in markets like the US, yes, there is debate about the separation of banking and commerce. But from your vantage point, have you seen that debate evolve to any point where that line would be breached? It seems that while the debate has continued, there doesn't seem to be any other alternative workable model out there to transition to where banking and commerce can intermingle.
Well, typically, they haven't been allowed. It hasn't been allowed in the United States. There are stray instances of, small entities owning a bank, sometimes at arm's length. But in general, you haven't had, the mega conglomerates which combine industrial houses along with strong banks. In places like Japan, we had that. We had the zaibatsus, which were basically industrial combines around a house bank. And there was a belief that it was the strong zaibatsus which led Japan into World War II. The concentration of economic power also meant a concentration of political power. And it led to dictatorial tendencies that drove Japan into war. And in fact, post-World War, the US administration focused on breaking up the zaibatsus. Similarly, in Germany, the post-World War II US administration broke up the large combines between in Germany, and arguably that helped German democracy post-World War II. So this is an old debate. Self-lending is part of the issue, and it's important in India, where the ability to regulate and supervise is still is a work in progress. But apart from the financial risks, financial stability issues, is the economic concentration issues. And in India, as we have some industrial houses gaining tremendous economic power, it's an issue which has to constantly be examined. And it's one reason why we had this rule on the table.